Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 26, 2022. Stock market has pulled back pretty hard today. We still have geopolitical tension and we got high interest rate, and Fed is going to raise the rates probably 50 or 75 basis points. And we got geopolitical tension and China lockdown due to COVID related issues. So we got all these impacting stock market here. That's why market pulled back pretty hard. So in today's session, we will look at stocks to avoid. These are the stocks with a high debt load and high interest rate. We got one example here, Farfetch. It's got high debt load, high interest rate. It's paying right now for its debt, and also earnings outlook is not very good. So with that, let's jump in here. So from a market update perspective, look, we are in the fear zone right now. We can come into extreme fear zone anytime. I expect us to at least go to level 20 or so. At this time, as it goes into extreme fear, money will start pouring in from sidelines and market will try to go higher. So that's how it's set up here. As we go into extreme fear zone, that's when the money from sidelines will slowly start pouring into the market and take the stocks higher. And also we got Fed here. Fed is going to increase the rates. That will also have some impact on the market. That's why market is really preparing for a higher rate hike here. That's why it's coming down pretty hard. All right, now let's jump in and look at the market update. Look, market update perspective. Satya Nadella from Microsoft has delivered. Microsoft beats on earnings after raising the prices for Office. Stock jumps after strong forecast. I think it's a good one here. Microsoft is firing all cylinder under leadership of Satya Nadella. And then you got here a couple not so great news here. We got Texas Instruments, TXN drops as China COVID restrictions prompt cautious outlook. This is a great stock here. I would be buying this one slowly. It's a great one to slowly buy. Off late, all these semiconductor chips are dropping off pretty big time here. So no need to rush and buy huge quantity, but it's always good to buy slowly and slowly accumulate. And you got Google here, Alphabet. Google stock dropped due to the earnings fell short here. Stock dips. Google is also a great one here. They got a good leader, Sundar Pichai. I think it's a good one to slowly start buying after a day or two, because this one is going to come back with vengeance. And then you got UPS. UPS is also down, as you can see here. Dropped to a 6-month low here. So at this time we got to watch out for maybe in a day or two we can start buying some UPS here. It's a good one for the long haul. And then you got GE. GE has come down pretty hard here. Biggest sell-off in 2 years. FCS free cash flow miss here. I think Larry Culp is a great leader. It's a long-term buy, but there's a lot of short-term pain here. Maybe we should wait for this to settle down and then we can slowly buy. And look from a market update perspective. Look at the drop here. Huge drop here. Dow Jones Industrial Average dropping big time. Even toward the close. Look here. Toward the close also it kind of had a big red candle here. And it's dropped big time here. 809 points. 2.38%. And look, we got Nasdaq here. Nasdaq is the weakest of all today. Look, it dropped by 3.95%. That's the biggest percentage drop out of these three indices in one day here. And look here, we got a huge drop here toward the end. There's a big thud. It came down big time toward the end of the during the closing here. And same story, S&P 500 down big time. And look, it also had a 2.81%. So it's the second weakest in one-day chart here. This is all one-day chart. So with that, let's jump in here and look at the market update. From an ETF perspective, look, we got SPY, S&P 500. It's in a correction territory right now. Look, it's down 13% year to date. That's a big drop for S&P 500. We are squarely in the correction territory. Look, we are down below Bollinger Band 20-day, and we are down below 5-day SMA, 10-day, 50-day SMA. So pretty much we are big time down here at this time. And look, we got QQQ, one of my favorite again, also down big time. Look, it's also down big time here. This is squarely in the correction territory. Look, it's down 22% for the year. So it's also down big time here. So look, IV percentile for these ETFs are very huge here. So this is one of the reasons. If you got good buying power and if you got a big account, you could sell some put options way below the current price and make some good money. But make sure you got good buying power. You don't want to get into too much margin. And then you got IWM here. Again, it's also weak, as you can see here. And look, it also has a little bit higher IV percentile. And as you look through here, 1-day chart here, look, 1 day, most of these ETFs are down here, with the exception of TLT. Bond is going higher in 1 day and 5 day. That's going to push interest rate down, which is a good sign. And look, US dollar is getting strengthened here. UUP is a US dollar here. That's getting strengthened. This is going to cause some multinationals and commodities to fall off. That's why commodities and multinational companies are dropping off slightly. And then you got energy here. Finally, today energy went higher, as you can see here. Energy is still in a limbo right now with all the geopolitical tension. Energy does not know where to go. Typically, it goes down when the dollar goes higher. But now we got geopolitical tension. That's why it's going higher, as you can see here. And then we got utilities. It's also weak, as you can see here. So, and we got, I think, GLD here. Gold is going higher slightly. But look at the RSI here. Most of these ETFs got low RSI, with the exception of UUP here, which is a high RSI that tells the US dollar is going gangbusters here. But most of these ETFs are very, very, very low. Probably with the exception of XLP here, which is a little more stronger, as you can see here. But most of these ETFs have got low RSI. That tells you could slowly buy these ETFs. I love buying ETFs like SPY, QQQ, and even IWM. GLD is a great one to buy slowly, and even SMH is a good one. And one of my favorite is really XLV, which is a great one. You could buy this slowly, take advantage of the downtime here. All right, now let's jump in here and look at the major indices here. Look, we got Dow Jones Industrial Average. Look at the volatility here. Coming down great here. It's the 3-month chart here, going up. Look, we got a nice downturn today. Big down here. I think it's going to retest these lows. Watch out for a couple more days. We might be retesting these lows. That's also in the cards here. And then you got here S&P 500. It already retested the lows, as you can see here. We are in the retesting zone here. From this point onwards, you could see some bounce back here. Typically, as you see, it's a nice head and shoulder type pattern here. It can bounce off and go from there. And then you got NQ here, Nasdaq. Look, it broke below. It retested and came down here. It's also trying to go higher. Nice head and shoulder type pattern here. We'll see how it goes. It's not quite head and shoulder, but it's trying to see where to go from here. It's a small bounce. It can also go higher slightly. Look, in the futures market, it's a little bit higher, as you can see here. Dow Jones is high by 162 points, and all these indices are showing some small gain in the futures market. All right, Russell is very weak, as you can see here. It broke down the support level here. It's trying to bounce back, as you can see here. And gold is also struggling here with the US dollar getting strengthened. Gold is also struggling slightly. It's also trying to bounce off of its 1900 level. And then you got crude oil. Again, crude oil is bouncing back, as you can see here. Nice support level here. It's bouncing back due to geopolitical tensions. And bond is finally strengthening after selling off big time here. Folks are buying some US Treasury because it's a safe haven type investment here. Interest rates are finally settling down, as you can see here. That's a good sign for many of these companies with the high debt load. I think it's a good one. So with that, let's jump in here and look at stocks to avoid. So these stocks have high debt load. Keep watching the debt ratio here, debt to equity ratio. Stock at the top has got highest debt to equity ratio here, which is TCDA. And this one is a $10 stock, as you can see here. And look, it's paying 12.40% interest rate here, and it's got look, it's got $142 million debt and a free cash flow negative here. This has done well in 1 year and 6 months. And look, it's got a buyback yield. It's issuing more shares than buying back. So that's why it's a good one to avoid, especially because it's got a high debt to equity ratio, and stock seems to be jumping higher. Look, high RSI here. Earnings per share is negative, but it's done pretty much okay in the past, but good to avoid just to be safe here, because it has got some good debt load here, and it's paying good amount of interest rate, which is 12%. And then you got PTCT here, PTC Therapeutics. Look, it's done well in the past, 217%. It's got negative free cash flow, as you can see here. And it's got $535 million total debt. It's paying 15% interest rate. That's too high. So you got to be careful with such names here. Even though company has done well in the past 5 years, it's paying too much interest rate. And we got a few more here. We got IEA here, infrastructure. Look, this one, as you can see here, this is a big time diluting its share count, and also high interest rate, 11%. And look at the debt they have. They got around $386 million in debt here. They seem to have pretty okay next year EPS growth, but very low score. That's not a good sign here. And we got a few more, as you can see here. We talked about Farfetch. Farfetch, look, this one is a big time. They got a lot of debt here, $730 million debt here, and they're paying 10% interest rate, and also low overall score here, 24. So it's a good one to avoid. Look, it's a free cash flow negative, and this one has not made money for investors in 1 day, 5 day, 10 day, however you look at, they have not made money for investors. Good to avoid. And then you got Norwegian Cruise Lines here. I think this one has got a great leader, but what's going on? They got high debt load here, $12 billion debt. That's a huge debt load here, and they're paying 15% interest. That's a huge interest to pay here, and they're also diluting the share count, as you can see here, 32%. They're issuing more shares than selling or buying back. So then we got a few more here. We got TH here. TH, as you can see here, this one also has got high debt. They have got $332 million debt here, and they're paying 10% interest rate. That's a little bit high here. They got okay score here, but I think it's a high debt, high interest rate to pay here. And we got a few more here. We got Axsome. This came tumbling down, as many of you noticed just yesterday. These guys also got high debt load here. Look at the debt load, 11% here, 11% interest rate, I mean. And the debt is about $50 million, not too much. And this one has got negative earnings per growth for next year, which is not great. And they got next year EPS growth also negative, as you can see here. All right, so let's look at a few more here. Look, we got GSM here. This one is also big time. It's got negative EPS growth for next year. High interest rate, 15%. They're paying too much interest rate. And look, they got a negative EPS growth for next year. And I got a few more, as you can see here. All these companies keep watching the debt load here. I mean, interest rate they're paying too much here. And look at the debt load. We got total debt right here. A couple of things stand out here. Look, we got ITUB. I think this one is a bank. It's probably for the banks. It's okay to have a little bit higher debt load, but look at the interest rate they're paying, 15%. That seems too high to me. And we got a few more here. We got BBD. Again, it looks like a Brazilian bank here. and this one also is paying high interest rate on its $46 billion total debt here. That's a little bit too high. This one has not made money for investors in a while, as you can see here. And we got a few more, as you see here. We got one more bank here, Banco BBVA here. Look, this one also high debt load here and high interest rate. This one also has not made money for investors in a long time. And we've got a few more here. We've got Hudson again. This one also, look, this one has got $100 million debt here, paying high interest rate. And we got a few more, as you can see here. So with that, I suggest, take a look at these. If possible, try to avoid them, mainly because they're paying too much, interest rate on their debt. And some of these companies, as you can see here, you got a buyback yield that tells you these companies here, they're issuing more stocks than buying back, and they're also diluting the share count. So you got to be careful with such names here. So with that, thank you very much. Happy investing and trading. Please subscribe.